This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, March 10th, 2015. So the euro has extended its declines to fresh multi-year lows, now breaking below latest barriers at 108. If we look back and look at the consolidation that we had seen between 1098 and 1535 several days back, and you take that move and you project it to the downside, that gives you a measured move downside objective that comes in around the 106.65 area. So this is where the market could be headed over the coming sessions. At the same time, we need to not forget about the fact that daily, weekly, and monthly studies in this market are highly overextended, so there is risk for some form of a major correction before the market resumes the downtrend. At this point, though, a break back above 109.07, that's the high from Monday, would be required to take the immediate pressure off the downside. Sterling dollar. So cable continues lower after putting in what appears to be a lower top in the 155.55 area, but will need to break back below the 2015 low at 49.51 to confirm and open the next measured move downside extension towards 43.50. At this point, only a break back above the high that we saw from Friday, which came in at 152.55, would delay the immediate bearish outlook. Dollar yen. So finally, some exciting developments in dollar yen, with the market taking out that 7-year high from December at 21.85. This ends a period of consolidation for dollar yen and opens the next measured move upside extension over the coming weeks towards 128.15. At this point, only back below 115.55 would negate the bullish outlook, while any setbacks in the interim should be very well supported ahead of 118. Euro Swiss. So nothing much going on with the Euro Swiss market over the past several sessions, though the recovery outlook is still firmly intact. A break above 108.15, which is current resistance in Euro Swiss, would open the door for a move towards psychological barriers at 110. Ultimately, only back below 104.14 would negate the current recovery outlook, while any setbacks are expected to be very well supported ahead of 105. Aussie dollar. So Aussie dollar looks poised to continue its bearish trend, with the market taking out 76.25 or on the verge of taking out 76.25 to confirm a lower top at 79.13 and open the next measured move downside extension towards 73.35. At this point, only back above 79.13 would compromise the bearish outlook. Dollar CAD. So dollar CAD has been consolidating over the past several weeks since putting in a fresh multi-year high at 128 back in January, but the market looks poised to break above that 28 high and head towards the 2009 peak at 30.65 further up. At this point, though, we do need to see a break above 128 to confirm a higher low at 23.50 and open that fresh upside extension. Only back below 23.50 would delay the current recovery outlook or the current constructive outlook in dollar CAD. Kiwi dollar. So Kiwi dollar looks like it wants to put in a lower top, a medium-term lower top at 76.14 to be confirmed on a break back below the multi-month lows at 71.76 going back to the 3rd of February. A break below 71.76 will confirm that 76.14 lower top and open the next measured move downside extension in Kiwi towards 67.35. Only back above 76.14 at this point would compromise the bearish outlook. SPX 500. So the S&P 500 is consolidating recent declines since the market broke down below and triggered that double top in the previous week. For now, and from here, fresh setbacks are seen below the recent lows that we saw at 2067 towards 2040 further down. At this point, only back above 2105 would compromise the current correction in the SPX 500. Gold. So gold continues with its sharp declines, and the market is now broken down below key support in the previous week at 1190 and has taken out next key support at around 1160. But we do see some good internal support around the 1160 area, and if you look back at the lows that we saw in on October 31st, 2014, you can see that there's some internal support around the 1160 area. So if the market can hold above 1160 on a daily close basis, that could still keep the recovery basing outlook intact and open the door for a bullish resumption or a recovery in this market higher. However, at the same time, inability to close above 1160, we're kind of at that final point right now where if we can't hold above 1160 and we close below 1160, this will open the door for a more immediate retest of that critical 2014 base at 1131.